Hey, Bill Soriano here from Pittsburgh. I wanted to make a quick video today just to kind of talk about the DXY and the USD pairs and kind of how the impulse scanner helps us, overall determining which pairs we want to trade. Okay, so I like to watch some YouTube videos from time to time. There's one guy that's pretty good here, and I'll give him a plug, but because he's from Pittsburgh like me. Justin Bennett's his name. He has this YouTube channel called Daily Price Action, and he also has a service where he teaches and has a Discord channel and stuff like that, like our community does. But he does a very good free weekly forecast, and he also comes on a couple days each week and does a free video on YouTube here. But the forecast is interesting because what he does is he goes over the DXY, the dollar index, and he shows how that relates to how you want to trade the USD pairs like EUR USD, GBP USD, and USD JPY, the dollar yen. And it's kind of interesting how he showed this week how they're in consolidation. And this is something that we've taught in our community for years. And so what I want to let me just show you real fast what I mean. So if you look at EUR USD here, for instance, I'm in TradingView right now. If you look on the daily chart, you could see how it's just kind of in this consolidation here, where it's in this range. Maybe not so much a consolidation, but it's in this range. And if you go to the 4-hour, you could really see the same thing. See, going way back here. So it's just kind of ranging. And we're always taught that, we could box this up, right? And we really don't want to trade this pair, right? Until it decides to either, break out to the upside, right? And then we can look for longs, or it decides to, break out to the downside here, and then we can look for short opportunities. But we always teach in our community, this was something we really taught during Smart Money, that you just want to stay away from these pairs that are consolidating or in a range until they decide to break out either way. And I started thinking, and he kind of showed that in the DXY, the dollar index, and also how that related to EUR USD, and also the dollar yen here. See the dollar yen, you kind of see this same thing here on the 4-hour chart, where it's just kind of in this box here. And again, we needed to decide to make a break either way, either to the upside or to the downside, so that we could decide which way it's going to go. Okay. And we know that we need to stay away from trades when it's ranging like this, unless you're the type of trader that is experienced and happy in shorting at the top and going long at the bottom. We kind of stay away from that. And we kind of teach our students to stay away from that as well. So I started wondering, well, how does the impulse scanner help with this? And so the thing is, as you know, when we do our daily scan on the impulse scanner, we look for all of these time frames to be going the same way, right? So we just do a quick scan on all 28, 29 pairs, whatever are in here. And we only want to trade the pairs where these arrows here under the time frames are all bullish or all bearish. Okay. And we will, depending on how we're trading, we may disregard the 1 minute and also the 5 minute. And we're just kind of, I just kind of look for the 15-minute through the daily to all be going the same way. That way I know for sure that I'm trading with the higher time frame trend, and I can determine that in a second, right? I don't need to go to the chart and look at the daily and look at the 4-hour and look at the 1-hour and look at the 15-minute and spend time deciding and determining which way it's actually going. I can see that in a split second just by clicking through my impulse scanner here that we have with our community. And that's why this is so important. And so if you look at a pair like EUR USD, if you're going to click on this, right away you would see that the 15-minute and the 30-minute are kind of bearish, while the 1-hour, 4-hour, and daily are bullish. So what's that tell you? We would stay away from trading this pair, right? So again, we wouldn't want to trade that pair because of the range that it's in that I just showed you, but you don't even know how to, you don't even need to know how to spot that range. And especially if you're a beginner or intermediate trader, you may have trouble determining if it's actually in a range and if you should stay away. But if you just come to our impulse scanner here, you would know right away that EUR USD at this point is not a pair that we want to trade. And if you look at USD JPY, you would see the same thing here, where the first four time frames it's bearish, and then the higher time frames it's bullish, right? So this would tell us right away, stay away from this pair. And you know, they may not always be in a range because this is happening, but this signals us to stay away from the pairs right away. Okay. And so we don't need to be able to determine, we don't need to look at the daily and look at the 4 hour, and we don't need to be able to determine if it's trading in a range and needs to break out to the upside or the downside. Because if we use the impulse scanner here, we're able to do a quick scan, go through all the pairs, and determine which ones that we want to focus on, either for the week or for the daily session that we're currently in. Okay, and that's why it's so important. So watch my videos in the group here. And if you're getting this video, you're not in the group, make sure you send me a message so I can add you to the group. That's my impulse impulse trading strategy group on Facebook. And so, you know, I do some videos there. I did a kind of weekly thing, and I'll come on here live a couple days a week and show you what trades I'm looking at, why I'm looking at them. But basically, what my strategy is, I use the impulse scanner here to determine which pairs I want to trade. And then what I'll do is I like to go to the 4 hour chart, and I like to find a good order block to trade from. And then once that order block gets hit, I like to drop down to the 15-minute. And then I use a specific indicator right now to determine when it is a good time to take that trade on the 15-minute. So the 4 hour is my higher time frame, although I want the trend to be going the same on the 15-minute all the way through the daily. But the 4 hour is the one I zone in on to get to that area of interest that I'm looking for price to move back to before I would look to take a trade continuing with the trend. So I always want to trade with the higher time frame trend. Okay, and I did give a couple examples yesterday, but let me just give you one here while I'm on here with you real fast. This was from this week with GBP CAD, right? And again, the impulse scanner was telling me that this was bullish. And so it was bullish on the time frames, and we can go there and look right now just to see. But you see here, GBP CAD right now here on Sunday is bullish on all the time frames except the 1 minute. Okay. Now for me, this is how most people in our community trade. They want the ones that are all bullish here, and they disregard the 1 minute. So either all the other ones bullish or all the other ones bearish. I disregard the 1 minute and the 5 minute, and I look for the 15-minute through the daily. Okay, but just let me show you then what happens is here. I have this indicator that I use called Smart Money Concepts Lux Algo. So you want to watch my videos to see how to get that. It's free. You don't have to pay for it. But this indicator helped me to identify an order block right here that you see shaded. And some of the characteristics of a good order block are, one, you could see how this wick comes down here. And again, we're on the 4 hour chart because that's where I like to identify my order blocks. The reason why I use the 4 hour is because I want to drop down to the 15-minute to take my trades. So if I would use the daily, then I would want to take my trades on the 1 hour, right? And if I would use the 1 hour to identify the order block, I would want to take my trades on the 5-minute. Since I like to take my trades on the 15-minute, I really like that because I'm not rushed like you are on the 1 or the 5. And I just like the 4 hour order blocks better. Over the years, I've found that the 4 hour order blocks are more reliable than the 1 hour order blocks or the 15-minute for that matter. But everybody trades differently, and a lot of people in our community use the 15-minute to identify the order block. They drop down to the 1 minute to take trades. So it's just whatever you're comfortable with. Okay. So you could see here, this was the order block, and I set an alert in trading view. That's this blue horizontal line that I put there, right? And then what happens is you could see here, price came down and it went into the order block, right? So it pulled back, and now that's a good time to look for a trade to continue this trend upward, because you could see here that, for our chart, price is just making higher highs and higher lows, right? So we're looking for that to continue, right? Now it did drop down here, and it did kind of give you a change of character because it does drop down and make a lower low here. But that happens whenever it's pulling back to a area of interest, which is normally an order block, a liquidity block, whatever you want to call it. That happens sometimes. So that's to be expected. Now, if this would decide to come down and then make another move down, then you have what's called a 2x2, right? Or that's a signal that the trend may be about to change, okay? And if something like that would happen, then more than likely when you looked at the impulse scanner, that would reflect here on the 4 hour or the daily trend signaling the other way. So that would keep us out of these trades. But anyway, right now, we're still in a good area here to take this. Price moves down into our order block here. And so what I do here is I just drop down to the 15-minute. And so you could see right here, we have a couple. You can see right here, our price comes down and it hits that blue line here. That's that 4 hour order block, but we're on the 15-minute chart. And what I do is I install this Hall moving average line here, and I set it to a period of 100, So that's 100 candles, okay? So 115-minute candles on the 15-minute chart, if you're on, okay? And so you can see here as it's red, because price is obviously moving downward on the 15-minute chart here in order for it to get back to the order block. And we don't just want to jump in because it goes into that order block. We need something to happen. We need a signal to decide to take this long now. And some people wait for a lower time frame flip, which is like a choke, a change of character, a big move up, and then they identify some imbalance or an order block to get in. I've noticed that this Hall moving average at the 100 period mark is very good for this. So you can see here how it's red, and then right here it turns blue. So if you enter when it turns blue here on that next candle, because you have to wait for the one candle to close to make sure it stays blue, okay? If you see here that if you get in there, and if you set your stop loss right below these current lows here, and you go for a 1-to-2 risk to reward ratio trade, you're very quickly in this trade at like 9:15 p.m. Eastern time, and you're out of it around 3 in the morning the next day. Okay, so you're only in the trade for about 6 hours, and you get your 1-to-2 risk to reward ratio. And we've also noticed that sometimes this trend line will change before we get stopped out or get to our take profit. And that gives us an early exit signal, either when we're down, so that we don't lose our whole 1-to-2%, whatever we're trading. I like to trade 1% of my trading account. I like to risk 1% is what I'm saying, to get a 2% gain. That way, I'm able to lose 2 out of 3 trades and still break even. But sometimes we can get a signal here and we can get out and not lose a full 1%. Maybe we only lose a 0.5%. And sometimes we can get out of this trade while we're still up before it drops down because of this Hall moving average line here. So I really like this Hall moving average on the 15-minute chart to determine when I want to get in that trade. Okay, when it's safe to get in. Okay, because like we see here, we're trying to take this long, but on the 15-minute chart as well on the, you can see that price is now making lower lows and lower highs, right? So we don't just want to jump in here and take a long position because why? Because it can just continue, right, to make lower lows and lower highs and just continue downward. So we need something to happen. We need a signal to take this trade, and that's where I like this Hall moving average. And right here, it does turn from red to blue, telling us it is now safe to take that trade. And of course, you're not going to win every trade. No system is going to give you 100% winners. But if on average you're risking 1% to get a 2% gain, you can lose, like I said, you only need to win about 30, I think it's 37, 38% of your trades to actually show a profit. Okay. So this is how I've been trading recently. This is what I'm showing now in the impulse trading strategy group. And so go in there, watch the video I did yesterday, and keep an eye on your notifications to go off in the group when I go live during the week so you can see which pairs I'm looking to trade and why. Okay, guys, any questions, drop them down below. Have a great day.